Welcome to DPC Pediatrician. We're Dr. Phil Boucher
and Dr. Marina Capella, two DPC
pediatricians
pediatricians who are on a mission to share our love of direct primary care with you.
Welcome everyone to another episode of the DPC Pediatricians podcast. Today I am delighted to introduce Nate Goodman, who is a certified public accountant, a CPA, working and owning the Goodman CPA group based in North Carolina, which has a big team that extends many places as well. I am excited for this conversation because when I first started my DPC journey, there was a lot of confusion around the finances. I kind of wanted to do everything myself, so I figured out how to use QuickBooks, and I probably made some mistakes, but I was trying to do all my own bookkeeping, all my own accounting, all my own tax filing. After a while, when I got to year 2 to 3 and things were getting just too complicated, then I hired an accountant who has a bookkeeper, and now I'm in the phase where I'm really launching into true tax advising. So I kind of figured it out piece by piece, but a lot of you maybe don't want to do it the same way I did and maybe want more guidance from the beginning. So Nate, thank you for being here. Go ahead and just introduce yourself. Tell us a little about how you got into the world of advising specifically DPC practices.
For sure. Yeah. So I started my practice back in 2019, and I had a couple mentors who came around me to help me get into the accounting profession. I didn't go the traditional route of getting my bachelor's, getting a master's in accounting, going to work at the Big Four. Mm-hmm. So my background was in church ministry, and then meeting with a accountant who said, no one will trust you if you don't have either education or experience. Mm-hmm. So I went back to school, got some accounting classes, took my CPA exam, started working for that mentor then. And then a few years later, he sold me his practice when I had my CPA license. And so along that course, he was a very traditional tax practice. So you drop your documents off once a year and we prep your return and give it back to you. And there's not a whole lot of proactive planning throughout there. And I started to realize there was a little bit of a problem in our industry that people were only meeting with us when they had to versus when what would be really beneficial to meet throughout the year. And along that same time, we had a DPC open in our town. And so over my course of becoming self-employed, trying to figure out and navigate health insurance, healthcare for my family, this DPC opened. And once he explained what the model was, I thought, man, this is a no-brainer from our perspective to pay for like a MediShare or a Sedera and then pair it with a DPC plan. That's like some of the best insurance you could have with these big carriers, but it's a fraction of the price. So that got me really excited because I started to get really upset about the way healthcare was going and how expensive it was and for the benefit I was receiving. And then we started to build our practice around the idea that if you meet with your accountant throughout the year, we can actually help people get into better tax and financial positions. Very similar to the DPC model where you guys are trying to say, hey, we want to remove the barrier to access. And so by having this monthly fee, you can come see us whenever. There's no additional charges. We want you to feel like we're part of your team, that you can just shoot us an email or give us a call, just like you would somebody on your own team. And by doing that, we found a lot of opportunities for people to be able to take advantage of, whether it's on the tax front or on just the business side of things. So 2024, we kind of went full steam ahead into the DPC world, trying to then get to know more DPC owners, ask what they would like to see from an accountant. And we've worked to kind of build our services now around what people are asking for in terms of what the biggest pain points were with their accountants. And so that's our focus is how can we create resources on the financial side of your business to be able to help you grow and hit your goals of what you want to do, whether it's you want to be a micro clinic and it just be you, or you want to have a lot of different sites and multiple people working for you. We're working to build out more and more that service to be able to be your back office of your financial office. So
Gotcha. Okay. Well, I get to pick your brain for a little while here. So I'm going to ask some questions that I had when I was starting out, and then that I'm sure other DPC physicians have as they are starting out or growing their practices. So first of all, I think for someone who has never had to do this before, had to really do the finances and the books and the tax filing for a business before, the people who do certain things can even be confusing. So I was confused about what's a bookkeeper versus an accountant versus a tax advisor. Can you explain kind of the differences between those three and then how you work together as a team?
Yeah. So bookkeeper, accountant, tax advisor, CFO, there's also CPA, EA, right? There's a lot of terminology
Right.
that floats around in our space. A
Mm-hmm.
bookkeeper, anybody can call themselves a bookkeeper. Like you kept your own QuickBooks account, so you could be considered a
Uh-huh.
bookkeeper. An accountant, anybody can also call themselves an accountant. There's no like regulatory body that's keeping
Mm,
people from being an accountant. In our
interesting.
profession, typically bookkeepers are more transactional focused. They're going to enter and categorize things in your bookkeeping software. So, like if you swipe your card at Amazon, that's office supplies. And if you swipe your card for your EMR, that's software. And
Hmm.
they're sitting there just categorizing expenses as you go along.
Yeah.
If you buy an asset for your business, like a medical table or supplies, it might be larger, and a bookkeeper sometimes will get capped out on their knowledge to say, oh, I wouldn't necessarily know how we would treat this specific item. And that's where
Hmm.
an accountant would usually step in and be able to give more guidance on the overall system of your accounting.
Hmm.
But anybody can call themselves that. People can also call themselves a tax advisor without any like regulatory body.
Interesting.
The biggest difference then is a CPA has a state board similar to like your medical association or medical board that license
Hmm.
you. We have a state board that licenses us, and we have continuing education requirements. We have a code of ethics we have to uphold, and we have to keep our license current. And the EA is similar. EAs are licensed by the IRS to be able to represent their clients before the IRS, and they have to have some knowledge of the tax code to pass an exam and keep up with their continuing
Hmm.
education.
What does EA stand for?
EA stands for an enrolled agent. And so
Enrolled
they're very
agent.
just
Gotcha.
focused on the tax part of accounting.
Okay.
Yep.
Gotcha. Yeah, you gave that example of the bookkeeper is just going to kind of categorize it, but then there's this limit of knowledge. So I meet quarterly with my accountant who has a bookkeeper under her. And as I've learned over the past year and a half of meeting with her, she'll say, oh, look, I see that you purchased cabinetry for your building and it was $6,000. That's something that we want to depreciate because it's over a certain amount of money. And she knows how to work the magic of depreciation, which I
That's right.
understand conceptually, but when it comes to actually accounting for it, I'm like, please, Savannah, take it over because I don't know how to do that. So yeah, I've learned over time how they really do have different knowledge bases and different expertises, and she's been wonderful to have in my corner. So then when it comes to like from going to accounting to tax advising, where's that difference and what can a tax advisor do that a CPA or EA can't necessarily do?
Well, most people that are in this, like a CPA or an EA, would also say, hey, I am a tax advisor.
Gotcha.
And or they're a tax preparer. And
Mm-hmm.
this is more, I mean, I think social media has created this concept a little bit more than like
Yeah.
CPAs would just be like, I'm a CPA, I can handle most of your needs.
Uh-huh.
But now we're starting to see this distinction where people say, I just prep taxes once a year, which I can fill out your forms and send to the IRS. I know all the
Mm-hmm.
rules on where things should go. A tax advisor then is somebody who is thinking about your business and your situation and saying, based on what's in the tax code, you could do specific things in your business to reduce your tax bill.
Uh-huh.
And so they're very much focused on the Internal Revenue Code, your state legislation code, versus a bookkeeper and accountant is really focused on the financial reports of like your profit and loss and balance sheet and making sure that that is stated correctly. So, oh, I made this much money last month, and I know that I spent this much on my EMR, I spent this much on medical supplies, and I spent this much on advertising and marketing. Right? The
Mm-hmm.
bookkeeper and accountant are really focused on that, where the accountant might be thinking a little bit more about like this will also impact your taxes, where the bookkeeper is just trying to keep up with receipts and
Gotcha.
transactions.
Okay. Do most CPAs or EAs also do tax advising? Because I think that's also where I got confused in the beginning is like people would say, just find a good accountant, find a good accountant. And it just seemed to be this like magical unicorn that could do magically everything for me. So, yeah, how do we distinguish between a good accountant who can do some of that versus someone who's just going to file paperwork for us at the end of the year?
Yeah, I would say asking the questions about the service that they offer. And if they have like written documentation, like a one pager or some sort of proposal that they can walk you through that clearly articulates, here's the bullet points of things that I will do for you. There's a good chance that they have designed their process. Like once you pay them and they start working for you, they've designed their process to provide you those services.
Mm-hmm.
If you get into a meeting with the CPA and they don't have written information about how their system works,
Yeah.
it's probably going to be pretty haphazard as you go through it because they're just kind of making it up as you go along. And the reason I can say that is because I was there. So in the very beginning, I was trying to figure out, yeah, I can do it all, but what does it mean for me to be your accountant? And so we started to put bullet points behind that. Oh, I will reconcile your QuickBooks account and give you a profit and loss and balance sheet every single month. I'll sit down with you quarterly and talk about your tax position. And then at the end of the year, your first quarter of the year, we're going to look at your tax return together and show you, hey, these are the things you took advantage of. And these are the things you said you didn't want to do. And that's how it impacted your tax return. And so I think when you're looking at a good versus bad accountant, I would also ask around for referrals or references, right, to see if you've had people who, if they've have a ton of terrible Google reviews, or if they, not that that's not the end all be all. It's hard to make every customer happy, but it's a good starting point to see like how people interact with that accounting firm. And then asking them if they have some people that you could talk to.
So if you do find someone, like it sounds like your firm does, if a DPC physician finds someone who seems good, has good reviews, or maybe got a word of mouth referral about, and they're that type of person that's going to meet with you periodically and be proactive about your tax approach, how much can you expect to spend? Because that was also something I got a little bit of sticker shock when I was looking around at options. Like, oh my gosh, is this really worth it? They're just, I don't know. In my mind, it was sort of this simple. You're just putting some numbers in. You're just categorizing. You're just filing some paperwork for me. But it really is more complicated than that, as I've learned. How much is reasonable for someone to spend on a good accountant who can do some of that tax advising as well?
Yeah, if you want like full service, somebody to manage your bookkeeping, do the tax advising, prep the tax returns. I'm going to use a basic situation. Let's say you own your DPC practice and you don't have anything else going on and you're married. So you have your return and you have your business, and there's your spouse has a W-2 job. Then in that situation, you could pay anywhere from $500 a month, maybe $800 a month, all the way up to $1,000 or $1,200 a month. And so the real benefit there is if you could pay somebody $12,000 a month, or sorry, $1,000 a month, so $12,000 a year, then if they can help save you $20,000 in taxes, then it would make sense to do that because you're saving $8,000 versus working with a bookkeeper for a couple $100 a month, paying your tax person $1,000 or $2,000 at the end of the year and missing out on all those tax savings. So just like in like working with a DPC owner, right? People would look at that and say, why would I pay you an extra $200 per month when I've already got health insurance? But then you guys have all the stories and success stories of, hey, we worked with this person so they didn't have to have surgery, right? They're the huge value add. Or, hey, we worked with this person throughout the year so they didn't have to go on that really expensive medication, or they could get off of that medication because they were now getting reminded and working proactively to find better outlets for them to receive medical care, very similar to what we do, right? If we're incentivized to look for ways to help you receive value, then you're paying us and our end goal is aligned. It's less of just a transaction. So
Yeah, gotcha. I feel a lot of resistance, and I was in that space where I was like looking at, there's no way I'm paying more than 500 a month for accounting and all of this, because especially as pediatricians, we're kind of we carry a little bit of trauma from being the lowest paid specialty on the ladder of physician specialties, right? And then also we're starting out as micro practices. I mean, the first year I essentially didn't pay myself for about the
Yeah.
first 9 months. And then I was paying myself, my first paycheck to myself was $2,000 for a couple months. And then even now I choose to invest a lot of money into my practice as opposed to pay myself. So there can be this mental debate of like, what is this worth it, right? So
Yeah.
I don't know, how do you justify that when you're trying to sell your services? And are there lower cost options where someone who is starting out, especially in those first few years, where they can't afford that $1,000 a month, even if they wanted to, even if they completely believed in what you have to offer, is there a more budget friendly option, especially for those starting out?
Yeah, I think one thing, I've worked with a lot of startups, not actually working, like they're not paying us for our services. So one thing we do is we try to train startups on how to manage their QuickBooks account at first. So
Yeah.
that way they can, I think it's a very good practice in the beginning to see the money coming in and out of that bank account. It helps kind
Uh-huh.
of connect reality when every time we swipe the card of what is happening in our business. And it also
Hmm.
helps you, like when you transition from working for an employer to becoming your own boss, there's so
Yeah.
many more hats you have to wear. But to
Hmm.
do business ownership well, you have to learn to sit in the different seats before you can pass it off. And
Hmm.
so if you understand conceptually more of how your monthly accounting works, it gives you that kind of confidence to go in and say, hey, I've got questions about that. And I used to do it. So, like, why does it look this way now versus when I did it, it looked that
Yeah.
way? Right. There's a much more profitable conversation. So, I think that
Hmm.
is a more budget friendly way, especially starting out. You've got
Hmm.
lots of free time, theoretically, even though you're doing a ton of different things, that the monthly accounting can be a part of your process. And we usually say start weekly, manage it weekly, and look at it monthly to like look at your reports to see the end result of
Hmm.
what you're doing. And then
Gotcha.
have somebody who can kind of be there as a support person if like you
Hmm.
have questions.
Yeah.
And then from a tax planning and advising standpoint, your tax bill is also not going to be that much larger because you're going to be making a lot less money in the beginning. So the
Hmm.
need for somebody to be doing this tax planning, I think what we've been trying to provide to the community is some free resources to be able to say, oh, when should I become an S corporation? When should I, how much should I pay myself? And you read a lot of stuff online. So we're trying to say, hey, for DPC specifically, here
Yeah.
is like, here's the when and the how. And then
Uh-huh.
when you get to that point, we can be a person that can come in and help support you. But
Hmm.
we talk a lot about that, about budget, and we don't want to break the bank.
Yeah.
We want you to have that financial clarity without
Sure.
spending all your money on your accounting services because that makes no
Uh-huh.
sense.
Yeah, gotcha. Well, that was a perfect segue. You mentioned the S corporation. So most of us in the DPC world, we start out as a limited liability company, an LLC or a professional LLC, depending on our state. And then eventually we're advised that, oh, you should file as an S corporation. And that whole terminology and that status can be a little confusing. Can you briefly explain like what that actually means and when we should be considering it?
Yep. So yeah, we do see most people start out as the LLC or PLLC depending on their state's requirements. And when you do that, you have basically set up this thing separate from yourself, right? So people
Mhm.
are paying that instead of you, and you are working in this LLC. But for the IRS's sake, when the IRS views your tax situation, they see
Mhm.
you and the LLC as one. There's not a
Yeah.
distinction when it comes to taxes. So
Uh-huh.
the S corporation election is telling the IRS, hey, on X date, I no longer want you to see me and my LLC as the same. I want you to see us
Mhm.
as separate. And so now the IRS says, well, if you're going to be separate, you have to file 2 separate tax returns, one for the S corporation and one for yourself. And at that point, when you separate yourself from your LLC, the LLC that's now an S corporation will then hire you as an employee to do the work. But you're also a shareholder in the company, just like you could buy stock in Apple, right? You have stock in your LLC, and you can get distributions from the profit of the company. The IRS does the tax strategy here is, let's say you're making $100,000 in your LLC and you elect S Corp status. The IRS, if you didn't elect the S Corp status, you would pay about $16,000 or $15,000 in self-employment taxes on top of your income taxes. And so when you elect the S Corp status, the only thing you're paying those self-employment taxes on is your salary. So if you paid yourself $50,000 inside of your S corporation, you will have effectively cut your self-employment taxes in half. And this is one place we see a lot of doctors overpay in taxes, is they're like, well, I'm a doctor and so I need to pay myself a doctor's salary. But most DPC owners are not doctors all day long. They're answering email, they answer the phone, they're doing advertising and marketing, they're cleaning their office, right? All of those roles that you possess in your practice can actually reduce your total salary when you look at, well, how much should a janitor get paid, a secretary, a medical assistant get paid, and then how much time are you actually doing doctor duties? That's when we're going to pay you the hourly rate of a doctor. And that can help us bring down the salary of a doctor in the S corporation.
Gotcha. So for example, like as a pediatrician, when I worked in pediatric urgent care, the rate I was making was $140 to $150 an hour. So I could say, okay, it's my first year, my second year, I'm only really seeing patients 15 hours a week. And so I could do the math, 140, 150 an hour times 15 hours a week times whatever. And then I could kind of come up with a reasonable salary for that. And then I could say, okay, I'm also doing 5 hours a week of administrative work. And if I were to hire someone else to do that, I would pay them $20 an hour, $25 an hour, right? And then add that. And then, I'm also doing janitorial work an hour a week. Then, okay, how much would I pay? So we kind of just like sum all that up to sort of come to what a reasonable salary for us would be. And of course, that might morph over time as I get busier. In the beginning, I was only in the office maybe 10 or 15 hours a week. Now I'm in the office 30 hours a week. Some of that is patient time. Some of that is admin time. So I was actually just talking to my own tax advisor about this because I'm very risk averse. And like, if I ever get audited, even if that chance is really small, I do not want to get in trouble. So I was asking her, how do we make sense of this rule that we're supposed to be paying ourselves a reasonable salary? Is there anything else that you would add to that to consider?
Yeah. And that's, I think, where like the tax advisor piece comes in, is that person should be able to help you document, right? And build out this idea of having a audit resistant tax strategy. So when we do reasonable compensation, we actually we do a whole study on their hours, and we look at all the fair wages, and we document all of our research and put it into a report. So that way, if the IRS did come and say, well, this is a doctor and they're paying them $60,000 when another doctor in that area is making $200,000, like, how are you justifying that? And we can then hand them that report and say, well, this is actually how they spend their time. And this is how they would get paid according to the fair wages for these specific positions in this area.
Right.
And so we try to document as we go along everything that we're doing. So that way, if an audit were to come, we can kind of alleviate the risk and you can sleep at night, right? Not where the virus is coming knocking.
So for doctors who are doing this for themselves, would you recommend they have some sort of official document that kind of shows how they calculated that reasonable salary?
It's helpful to have like a list of like your breakout of your hours on average of what you spend per week. And then you could use RC reports as a tool that you can use online, and you can actually pay for a report, or you can use like an AI tool to ask it to help you put together a report to document that.
Okay, perfect. All right. And then you mentioned that a lot of people sort of go to their accountant with just at the end of the year, they hand over all the papers, they say file my taxes for me and figure out where I can save on taxes. And that's not necessarily the best approach because it's a reactive approach as opposed to a proactive approach. So what tips do you have for DPC physicians when it comes to taking a more proactive approach with their accountant team?
Yeah. Our ideal clients are coming to us in this quarter, ideally like November, December, or even October, and saying, hey,
Hmm.
I'm looking for an accountant. I'm just trying to get ahead of the curve. It's our slowest season as accountants. And
Uh-huh.
so that's a great time to be asking for an accountant. If you don't have
Hmm.
somebody lined up and it is January or February, you're going to get somebody who's going to take you, but it's going to be like, we still accept clients during that time, but it's just a much more tighter, more busy time to be working with
Hmm.
somebody and get a full picture of their situation.
Yeah.
So one kind of best practice is just to ask your CPA or accountant and say, hey, we're approaching the end of the year. I'd love if you could help me look at my performance and see if there's anything we could do, and also help me just kind of figure out what I'm going to owe come tax time. It's not going to be a perfect estimate. We're not going to get it right on the bullseye, but we're going to get
Uh-huh.
close and be able to say, hey, here's some other things you could do before the end of the year to get this into place. And
Hmm.
so I think some other like tips, if you work with somebody, then like you find that accountant that you can do that with, setting up time to meet during the summer, meet in the fall, and meet in the winter to
Hmm.
actually talk through some strategies. Like you could hire your own kids to work at your practice, or you could rent out your house as a event space for your practice if you're going to do a social hour there, and actually receive tax-free income out of your business to
Uh-huh.
yourself. And you to do those strategies without the risk, like you were talking about, to be risk
Uh-huh.
averse, right? We
Right.
have to do those throughout the year and be documenting invoices and logs. And that's where having somebody that can do that for you and help you capture those savings with minimal risk, and so you can keep focusing on the business, that's where the real value comes in, because then they're working to help you get savings and you can keep working on your business. They can do the time log and they can invoice and they can go find
Yeah.
reasonable payments to pay your kids, right? They can do all of that work.
Hmm. Gotcha. Yeah, so that's one strategy. You just mentioned the potential of hiring your own kids as a tax saving strategy. What are some others that you see DPC physicians maybe missing out on that they could take advantage of?
Yeah, so some other great ones are, we call it the accountable plan. You can actually reimburse yourself if you're an S corporation. You can still get the home office deduction, and so you're able
Mhm.
to reimburse yourself for the portion of your home that you used through your S corporation. Inside of that same plan, we see a lot of doctors that miss out on some mileage calculation for those that are doing home visits. And so you can use a
Uh-huh.
tool like Mile IQ that just kind of runs in the background to keep track of your miles every year. And it can add
Mhm.
up to a couple $1,000 deduction every year when you're traveling to different locations, or if you're going to a mastermind or something like that, to keep track of
Yeah.
your expenses.
Mhm.
Another one's called the Augusta Rule, and this one came from Augusta, Georgia, and it's referenced in Section 280G. Not that you guys really care about the internal revenue sections, but you can rent out your personal residence if you own it to your
Mhm.
business for 14 days or less. And the money that you
Mhm.
pay to yourself is actually tax free because it's not considered a rental if it's less than 15 days. That
Gotcha.
one was created specifically by Congress people for Congress people because they
Yeah.
all owned homes in Augusta, Georgia, and they didn't want to pay tax every time the Masters tournament happened in Augusta, Georgia.
Interesting.
Yep. Some other ones that are really helpful is looking at retirement planning. So, super easy to set up would be like an SEP IRA. You can put up to 25% of your net income if you're not an S corporation into that, or you can
Mhm.
put 25% of your W 2 compensation. And so that one's
Mm,
pretty
that's a lot.
quick to be able to get money into it, and you get a deduction for it. or if you're looking for more comprehensive, like a 401k, you can now, there's a lot of plans online, like a Betterment or a Guideline, that can help you set up a 401k for a minimal cost. And you get a lot more flexibility throughout the year. And that also then you could offer as a benefit to your employees.
Gotcha.
Bonus depreciation is also back with the pass of the new OBBBA. So you can actually buy equipment and get a full write-off this year. So if you needed a new piece of equipment, don't just go buy equipment just to save on taxes, because that math never makes sense.
Yeah.
But if you need a medical table or you need some furniture for the office, it's a good time to be able to do that before the year is over, because you can get that deduction.
Gotcha. All right. Excellent. That's a great list of potential tax saving strategies. Thank you so much. Yeah. So thank you, of course, for sharing all your knowledge from the accounting world, and especially that particular insight that you're not just a CPA, but you have experience working with DPC physicians. And as we all know, it's a tiny little space within the business world with our own unique needs and our own unique challenges as well. Tell us a little bit more about the Goodman CPA group. Like, what does your firm do? What other things you mentioned in our private conversation earlier that your firm also tries to help practices in a couple of other ways? What are some of those ways?
Yeah, so we work to really model our practice to be very similar to a DPC, right? I think I mentioned that a couple times, but when you work with us, you get a team of 3 people that work on your account, regardless of what level of service you work with us in. You get an associate. That person helps manage your day-to-day bookkeeping. If you have sales tax filings, if you do payroll, they're the person managing the day-to-day. The advisor is the middle level who works as like a controller on your financial account side. They serve as a main point of contact, but they're also looking for tax strategy opportunities, and they're helping you do all that documentation work to actually put the tax plan into place. And then you also get a CFO, and people will either meet with their CFO once a year, once a quarter, or once a month, depending on kind of how quickly they're growing and what type of financial oversight they're looking for. And that CFO can help develop internal controls, help oversee the financial accounting systems, and they also serve for like really high level tax strategy ideas and thinking through what's next for the business. I think we've seen, once you step into the business owner world, there's some isolation that happens because you're not going to necessarily share all the financial details with everybody on your team that you're working with. And so to have a team that you can have those really candid and clear conversations with, we've seen a lot of success for clients to grow their business by having somebody proactively kind of in the back office looking over the financial information with them. So
Yeah. I've been sometimes shocked by business owners, not necessarily physicians, but just friends of mine, some of whom are physicians and some are not, who are business owners, and they're not looking at their books. They're not looking, which is a little foreign to me because I'm always looking at my bank accounts. I'm always looking at, okay, am I going to be able to pay my bills this month? What's it looking like? What's the leftover? Where can I invest? So I'm very cognizant of the money coming in, the money going out. But I think some people as physicians, we're not necessarily always skilled in or interested in the nitty gritty numbers, right? And so for those of us who perhaps are a little more intimidated by having to look at the numbers, what advice would you have? I mean, how can they get the support that they need so that they are aware of the things that they need to be aware of and making wise decisions financially?
Yeah, the way we talk about in terms of working with us or somebody like us, right, is if you could see 5 to 10 more patients, right, or have 5 or 10 more patients on your panel, that would pay our fee. So if you have the freedom now to see more people, then you could have a team in your back office working with you to have financial oversight. The only dumb question we say is the one that's not asked. And so we really try to be a team that genuinely cares and helps people kind of break down the stigma around finance and accounting. Because at the end of the day, it's just cash, and it's where the cash is coming in and where the cash is going out. And so if we can try to break down all this complex financial jargon and give it to the business owner in a way that they can understand, then you can start to make decisions and build your business in a way that helps you really make good decisions. And our goal is that DPC would be a sustainable business model. And if we can keep you doing what you're doing really well, we can help the DPC community thrive.
Wonderful. Well, that's a perfect note to end on. Thank you so much, Nate. If people want to find out more about you or your services, where can they find you?
Yep. You can go to our website, which is just goodmancpa.com. And if you ever have questions, I offer free consultations to DPC owners. If they're super stressed out about a situation or something, I like to come in and help try to bring some peace. So if you reach out through our website, you can connect with myself or somebody from our team. We do free consults as a service to DPC as well.
Excellent. Well, thank you so much for your time. And we hope to all our listeners, thank you for listening. We hope you found some pearls of wisdom from our great CPA here, Nate Goodman. Thanks so much for listening.
Of course. Thanks for having me.